Hey traders, Jonathan here at forexschoolonline.com, coming to you with your next educational video. I've just posted a new article up at the website and it's titled "The Secrets Traders Can Learn from Candlesticks and Price Action." It's all about the secrets that traders can learn and what price action is all about and why it actually works. This video is going to be all about price action, why it works, and the secrets we can read through the candlesticks and price action. A lot of traders I've started to find out don't pay a lot of attention to price action or the inner workings. They trade the patterns and they leave it at that. I've also started to notice that traders cut the wicks out of the candles. In other words, they either trade with line, they mark their levels with line charts, or when they mark their support and resistance, they pay no attention to the wicks at all. The wicks on the candles are nearly the most important part of the candle. The reason for that is the wicks are where price has been, and it's showing traders where price has been and where it's rejected. So if we have a candle, we have the body. The wick is where price has been. Traders have rejected this area, and now the wick is where price is rejected, and us as traders, we can see price has rejected this area, and we can learn a lot from this. Depending on where the area is, we can learn a lot from this. Depending on where this candle is in the price action, this can tell us a lot, and we can learn a lot about this depending on the context of where it is in the price action story. When we're marking our levels, we have to take the wick into context. We have to take this, especially when we're marking our levels, we have to take this in. So marking levels and mark support and resistance levels with line charts is a massive no-no, and I'll go into that in a minute. When we mark our levels, we have to take everything into play. We must remember that levels, support and resistance levels, are exactly that, they're levels. So we must take into account the wicks, we must take into account the bodies, we must take into account everything and remember their levels. So we must take into account the big round numbers around the bodies, the wicks, everything else around, and remember that they're not exactly to the pip and they are levels, okay? So this is the daily Japanese, Great British Pound Japanese Yen chart. The key level in the middle of this chart is this level through here. You'll see that it's a pretty solid level and it's pretty obvious, okay? So we have a pretty obvious level. It was a pretty obvious flip level, so we had price acting as resistance and it flipped to act as support. Now, if I flip to the line chart, you'll see that I have to move my line a lot lower to get it to act as support. This is where the problem comes in. This is where the problem lies. So if I mark my support level now as the line chart, this is where the problem is for marking support and resistance as line charts on every chart. Okay, so if I mark my support, my resistance level here, marking your resistance or support level with your line chart, you have to move the level either a whole lot higher or a whole lot lower. In this example, you have to move the resistance level a lot lower. The problem with that is, because you're cutting off the wicks, you're cutting off a whole heap of crucial information. And in a lot of scenarios, because you're cutting off that information, price will never make it back. If we mark the support level here, or the resistance level correction, we mark it, and then we flick back to our candle chart to look for a trade. So say we mark this level, and we say we're going to mark this level, and this is the only level, because this is a key level, key daily level. This is the only level we will hunt for a trade at. We then flip back to our candle chart, and we're going to look for a trade on the daily or the 4-hour chart. The problem is, because we've cut off all the crucial information, price never makes it back to this level. Okay, price never actually makes it back because we've cut off all the crucial information. If we use the candle wicks and we use the key information, we can get a correct and valid level. Okay, we need to use the candle wicks, we need to use all the information, and we need to use all the round numbers and everything around to get a valid level. Okay, line charts don't give us that. They may take out the bumps, but the bumps are what we need. The next thing I want to quickly touch on is what I talk about in the lesson, and it's price closing above and below a level. And this is really crucial. It's something that not many people talk about. We can learn a heck of a lot from price closing above and below a level. Okay, what I mean by this is with candle wicks and with candle wicks, let me just put this level in place. Here we go. Okay. We can learn a lot from price not being able to close above or below an area, and then price being able to close above and below an area. Okay, let me explain. Price goes up to test this area, and you'll notice the candle wick can't close above. That's crucial. Okay. The same here. Price can't close above. Candle wick pops through, but can't close above. What's crucial about this candle? It closes above. Once this candle closes above, this area is broken and it acts as a new resistance. Okay, we can learn a lot about when a candle either closes above or below an area. It's the same as we talk a lot about in our videos, price flip areas and old support turning to new resistance. It's the same process, and I talk a lot about it in the article. Another example is in the recent gold chart, and let me just get rid of that for you. Another example is in the recent gold chart. Okay, so price. Okay, so there's another example in the recent gold chart. You'll notice we had a really key level here. Okay, so we had this level here that price could not close below. Okay, so we had candle wick. You'll notice the candle wick pop through. The candle wick popped through, but it could not close below. Okay, that was the key. The candle wick popped through, but it could not close below. We had another test. We had another test, but the candle could not close below. We had a bounce. And then we had the crucial close below. Once we had the close below, this area acts as once we had the close below, this area acts as a old support and a new resistance. And once this area is broken, traders can start acting and start looking for new short trades. Okay, so once this area is broken, they can start getting on their bike and start looking for new short trades, and that's when you start going intraday trades. Because this is a daily chart, we know we're not going to get enough room. We know we're not going to get enough space and enough room to trade short trades, because we know we're not going to get enough space to make a reversal trade. So the way we get around that is we get on an intraday trade. Because if we get on a 4-hour or a 1-hour chart, we're going to get a lot more space. The daily chart, there's not enough space in here to make a trade. So if we get on the 4-hour, 1-hour chart, there's a lot more space and a lot more room. So because this is a key area, we want to make trades from this same area, but we just don't want to do it on the daily chart. We want to do it on the intraday charts. So this is when traders start getting down to their 4-hour and 1-hour, 2-hour, etc. intraday charts. If we move to the 1-hour chart, this is when the 1-hour chart formed this super A+ pin bar at exactly the same intraday flip area that we just discussed. This pin bar was with very strong recent trend, and it was also at this same area. This is the this pin bar is exactly an A plus pin bar that we talk about. It was sticking out and away from, and it was protruding away from all the recent prices at the solid area, solid daily area, and it had a really long, nice protruding nose. You'll notice the space I talk about with the daily. It was the daily area was right stuck up beside all the recent price, but because this is on the intraday chart, there's a lot more space inside here to trade back into, which gives it room to fall back into the lows. And this is what I mean. You can trade the daily key areas when they've pulled back tight, but you've got to trade them on an intraday time frames to give you space. Okay, when you're trading the daily charts with the daily key level, you need to make sure that you've had a decent pullback so you have space to trade into. The last chart I want to quickly talk about is the Australian dollar Swiss. This is with this pattern we've just discussed with the close above. This is the same sort of thing that now traders can be looking for. Okay, you'll notice we have a key level, key resistance, and this is the same sort of pattern that traders could now be looking for in the future with a close above. If price can now come up to this resistance and close above, traders could then look for price on the intraday chart to pull back. If price does close above this resistance, they could look for price to pull back on an intraday chart into this resistance to hold as a new support, and for price to move higher if price can close above this new resistance. Actually, I can see a similar pattern that has formed here. A similar pattern is formed on the daily chart here. I'll zoom in. We can see a similar pattern. We had a key level. We had price moving down, could not close. Here we had a support, could not close below. See the candle wicks, could not close below. Price closed below. Moved above, bearish engulfing bar, and price sold off. So with moving forward, if price can close above this key level, and look for this price to close above, and then look for the same pattern, but the close above is key. If price wicks just move above, and the body does not close above, then the level is not broken. The candle body has to close above and move through the level. For any clarification, jump on over and read the new article that's out, and post any questions in the comment section below. If you've got anything else you want to learn, jump on over at forexschoolonline.com. I hope you've enjoyed this video. If you've got anything else you want to learn, a price action at all, just jump over to forexschoolonline.com. I'll talk to you soon.